What if the best investment you ever make doesn't just outperform your 9 to 5 job, it replaces it, unlocking generational wealth and buying you freedom for years to come? Think back to the people who grabbed a piece of the internet revolution. Some became millionaires before most folks had ever sent an email. Now it's our turn, with the AI revolution happening faster than any tech shift before it. And the question is, are you prepared to seize it, or will you miss the moment like millions who dismissed the rise of Google and Amazon? Today, we're building a simple, smart $20,000 AI portfolio across 7 stocks and ETFs that could snowball into far more than your current yearly paycheck, possibly even millions, over the next few decades. If that sounds too bold, stay with me, because this isn't about chasing hype. It's about following clear rules, real data, and timeless principles built for generational wealth. Let's set the stage. Every few decades, something extraordinary rips through the world and changes how we live, work, and build wealth. In the late 1990s, that was the internet. Investors who spotted what Amazon, Google, or eBay could become before these brands were household names made life-changing fortunes. Then came the smartphone era, led by Apple and Samsung, reshaping everything from social media to your pocket camera. The cloud computing wave followed, quietly powering everything you binge watch, every app you use at work, and every major company's back-end infrastructure. Now it's artificial intelligence at the center of a new gold rush. Analysts project that AI will drive trillion-dollar markets within the next 10 years. Companies and governments aren't debating if they should use AI. They're racing to scale it throughout every business and organization. The challenge for us is not to get swept up in the noise. Like every gold rush, AI will attract wild speculation, headline chasers, and plenty of picks and shovels that end up worthless. Today we'll cut the hype, ignore the get-rich-quick distractions, and stick to the key investing rules that span decades: growth with substance, dividends and reinvestment, leadership incentives, risk management, and realistic expectations. The real winners in the AI revolution won't be flashy startups that burn bright and disappear. They'll be the giants built for long-term success. That's exactly where our focus lies. Our portfolio isn't about chasing hype. It's about backing the way ROI powerhouses shaping the future from every angle. First, we have the cloud and software titans, companies like Microsoft, Google, and Meta, that are bringing AI tools to billions of users and businesses worldwide. They're the ones turning cutting-edge technology into everyday essentials. Then come the semiconductor trailblazers, the masterminds behind the chips and hardware that power every AI model on the planet. Without their innovation, none of this would even exist. Finally, we have the global consulting and service leaders, the strategic forces helping traditional businesses weave AI into their operations and unlock real-world value. Together, these 3 pillars form the backbone of the AI economy, the ones building the infrastructure, the intelligence, and the impact. Let's meet our magnificent 7. There's a reason this powerful group pops up again and again, from big investing channels to trillion-dollar portfolios. Microsoft, the undisputed anchor of the AI era. If there's one company that's building the digital backbone of the future, it's Microsoft. Microsoft isn't just riding the AI wave, it's building it from the ground up. From Azure's powerful AI infrastructure to Copilot, the intelligent assistant woven into Office, Windows, and nearly every corner of enterprise tech, Microsoft is turning AI into a daily habit for millions of users worldwide. And get this, $80 billion is what they're pouring into new data centers this year alone. That's not a typo. It's the kind of investment that cements dominance for decades. And it's on top of the $50 billion they already spent last year. This isn't just growth, it's a full-scale expansion of their AI empire. The numbers speak louder than hype. Cloud revenue, up 22% year over year. AI service revenue, soaring 175%, hitting $13 billion already this year. That's real money flowing from real customers, not just futuristic promises. With a dependable dividend yield, rock-solid balance sheet, and an Altman Z-score above 8.6, Microsoft offers stability in a market that often feels like a roller coaster. Institutions own nearly 73% of Microsoft's shares, a loud vote of confidence from the world's smartest investors. If you want an AI stock that lets you sleep peacefully at night, Microsoft is the set-it-and-forget-it king. Alphabet, the growth dynamo of the AI elite. Sure, some say Google's lost a bit of its wild spark since the early AI gold rush, but don't be fooled. Alphabet isn't slowing down. It's strategically evolving. When you dominate search, YouTube, Android, and a massive chunk of the internet itself, you don't need to move fast to make waves. With Gemini, Google Cloud, and AI now embedded across everything from search results to ad targeting and video recommendations, Alphabet is turning its entire ecosystem into a self-learning AI engine. And that's where the magic lies. Every Google search, every YouTube view, every click is data, and data is the fuel that powers AI. Alphabet owns one of the biggest data engines on the planet, giving it an unmatched advantage in building smarter, faster, and more profitable AI systems. Financially, they're a fortress. With an Altman Z-score of 11.6, Alphabet isn't just healthy, it's elite. That score signals extremely low financial risk and strong long-term stability. Institutional investors and insiders hold the majority of shares. That's confidence from the inside out. While dividends are modest, they're reinvesting straight into innovation, fueling projects in cloud computing, AI, self-driving cars, quantum tech, and beyond. Meta platforms. The upside play, bold, unpredictable, and packed with potential. Over the last decade, Meta has delivered a jaw-dropping 700% return to investors. From being just a social media company to becoming an AI-first powerhouse, Meta's evolution is nothing short of remarkable. At the heart of its strategy is Llama, Meta's open-source AI model series. While competitors guard their systems, Meta's taking a completely different route, opening the doors and letting the world build with its technology. Meta is weaving AI into every single one of its platforms: Facebook, Instagram, WhatsApp, Messenger, and Threads. Billions of users are already interacting with Meta's AI every single day. With operating margins above 40%, a new dividend payout to reward shareholders, and an Altman Z-score north of 11, Meta isn't just innovative, it's financially elite. These three, Microsoft, Alphabet, and Meta, form the software backbone of the AI world. They're the ones embedding intelligence into our daily lives, at work, on our phones, and even in how we think. But none of that brilliance, none of that digital magic happens without one thing: hardware. The chips, the circuits, the raw power that makes AI possible. NVIDIA, the undisputed king of the AI chip world. When people talk about the brains behind artificial intelligence, this is it. NVIDIA isn't just part of the AI revolution, it's the engine driving it forward at full speed. Right now, NVIDIA powers over 90% of all data center GPU AI workloads. Let that sink in. 9 out of 10 AI models you've ever heard of are likely running on NVIDIA hardware. From ChatGPT to self-driving cars, from robotics to virtual worlds, it all runs on NVIDIA's Silicon Magic. Their legendary chip line, Hopper, Blackwell, and everything in between, represents the bleeding edge of performance. These aren't just chips. They're the supercomputers of the AI era. And then there's CUDA, NVIDIA's secret weapon. CUDA is what allows developers to harness the full power of NVIDIA GPUs for deep learning, advanced simulations, and next-gen computing. It's the gold standard of parallel computing. Financially, the numbers are almost hard to believe. Revenue is up 73% year over year. Yes, the stock has wild swings with a beta above 2, but beneath that volatility lies incredible strength. With an Altman Z-score of 52, NVIDIA isn't just healthy, it's practically invincible. Broadcom, the infrastructure backbone of the AI revolution, the quiet powerhouse that keeps the world's data flowing. It's not always in the headlines like NVIDIA or Microsoft, but behind the scenes, Broadcom is the muscle that makes scalable AI even possible. Every AI model, every cloud service, every digital connection relies on one thing: ultra-fast, rock-solid infrastructure. And that's Broadcom's domain. They build network switches, custom chips for hyperscalers, and AI accelerators that keep the biggest data centers on the planet running at lightning speed. Think of Broadcom as the circulatory system of the AI world, quietly pumping data through every server, every cloud platform, every neural network. The financials? Just as powerful. Quarterly revenue sits at $15 billion, paired with impressive operating margins around 43%. Institutions own nearly 80% of Broadcom's shares, a clear vote of confidence in both leadership and long-term execution. With steady dividend payouts and an Altman Z-score above 7, Broadcom blends growth with reliability. Taiwan Semiconductor Manufacturing Company. The heartbeat of the global chip industry, the company that literally makes the tech world tick. When you peel back the layers of every major AI breakthrough, from iPhones to Teslas to NVIDIA GPUs, you'll find one name stamped deep inside: TSMC. This is the world's most advanced chip maker, the silent giant behind the scenes powering nearly every household tech name you can think of. Apple, NVIDIA, Tesla, Broadcom, and countless others. AI and high-performance computing now account for roughly half of TSMC's total revenue. That's a massive shift, showing how deeply AI demand has woven itself into the company's DNA. They're growing at a 20% annual rate, and since 2022, their stock has tripled. With gross margins near 50% and an Altman Z-score of 9, TSMC signals excellent stability. Of course, there's geopolitical risk being based in Taiwan, but that's exactly why investors see it as part of a diversified AI portfolio. TSMC pays dividends that continue to grow year after year. Accenture, the quiet enabler of the AI revolution. You won't see Accenture trending on social media or making headline-grabbing product launches, but behind almost every major company adopting AI, there's a good chance Accenture is the one making it happen. Think of Accenture as the bridge between cutting-edge innovation and real-world execution. When Fortune 500s decide they want to automate, optimize, or scale with AI, it's Accenture's global army of consultants, engineers, and strategists who turn those dreams into reality. Steady revenue growth, a low beta under 1, and consistent dividends make it a true anchor in a high-volatility portfolio. With over 80% institutional ownership, the smart money is betting on Accenture's staying power. While others fuel the AI race, Accenture builds the road. The portfolio structure. The portfolio splits to balance tech cycles and compounding: 45% to cloud/software, 45% to semiconductors, and 10% to consulting/services. Each company is allocated proportionally, with the largest slices going to Microsoft and NVIDIA, then Alphabet, Broadcom, and TSMC, with Meta and Accenture rounding out for growth and stability. The dividend yield across the portfolio stands above the S&P 500 average, and the blended annual appreciation rate adjusts realistic future expectations to 18%. Not the spectacular supercycle numbers from 2020 to 2024, but steady, sustainable growth. Here's the real aha moment: the compounding payoff. With $20,000 invested across these 7, you could see your starting balance quadruple in the first 10 years, land north of $595,000 after 20 years, and soar to more than $3 million somewhere between years 25 and 30. The secret isn't magic stocks or trying to time the market. It's choosing leaders with staying power, adjusting for realistic returns, and letting the hidden muscle of compounding work over time. Now you might be wondering, can this really replace my job? What about risk? That's where our rules come in. Rule 1, growth with substance. We're picking companies that don't just spike on hype, but deliver growing, sustainable earnings over decades. Sustainable double-digit growth is still exceptional over a lifetime. Rule 2, dividends and reinvestment. Growth alone is volatile. Dividends provide a steady base, supporting the portfolio during inevitable slow cycles and steep corrections. Broadcom and Accenture serve up solid yields alongside compounding capital appreciation. Rule 3, leadership incentives. When you see institutional ownership above 70%, or founders and insiders holding meaningful stakes, it's a sign of accountability. These are companies with skin in the game. If they falter, their own fortunes drop too. Rule 4, Risk management. We're not blindly throwing money at headlines. We screen for financial strength using Altman Z-score, volatility measured by beta, and diversification, spanning hardware, software, and service sectors to avoid being overexposed to a single market whiplash. Rule 5. Adjust expectations. Don't fall for recency bias, imagining that insane compounding from last year will repeat forever. The next decade will be slower, steadier, but still rewarding for patient, disciplined investors. The real winners aren't chasing the fastest horse, but riding the whole race course over time. If you want broader exposure, consider top A IETFs. These bundle dozens of AI leaders, offer solid returns, and often pay growing dividends. AI isn't just another tech cycle, it's the generational moment, echoing the internet's transformation a generation ago. Back then, investors could track the shift from semiconductors to infrastructure and then high-margin services. Those willing to bet on the future changed their financial destiny. Those who ignored it watched from the sidelines as fortunes built with every wave. What's the timeline for wealth building? If you're dreaming of overnight millions, temper expectations. Even the best compounding stocks take years to snowball from a small initial balance to a life-changing sum. In the first 5 years, growth will feel slow, maybe double your investment if timing is good. Passing 10 years, the magic of compounding kicks in, and the second decade will outperform the first many times over. Of course, risks remain. Geopolitics for TSMC, regulation especially in social media and cloud providers, and rapid shifts can create challenges. Not every AI company will survive, just like many dot-com darlings faded away. That's why diversification and diligent review remain critical. What makes AI stocks powerful? 3 tailwinds: accelerating demand across industries as healthcare, finance, retail, manufacturing, and energy race to automate with AI-powered tools. Unrivaled data advantages as leaders like Microsoft, Google, and NVIDIA are already embedded at every layer of data creation, processing, and deployment, and continuous innovation through open source models, rapid hardware improvement, and explosive developer growth. By positioning yourself in the companies forging the platforms, powering the chips, and guiding adoption, you put your portfolio at the center of the revolution, not just hoping to catch the wave, but riding it for the long haul. Your next steps: if you want your money working smarter, not harder, now is the time to act. Set up your portfolio. Allocate $20,000 across these 7 AI stocks. Review the performance every quarter and keep the reinvestment going. Don't panic during corrections. Remember, the biggest gains come over decades, not years. Treat this as your shot at generational wealth. Subscribe and hit the notification bell to get the latest updates, deep dives, portfolio reviews, and risk alerts. Remember, the best investment you can make is in yourself. Seize your wealth moment, stack the odds in your favor, and let AI build a bridge to freedom you didn't think was possible. The future doesn't wait. What are you going to do with it? Don't chase the noise. Own the foundation. Because when the next wave of AI breakthroughs hits, and it will, these are the names that will already be there, quietly compounding, innovating, and leading. If you found this breakdown valuable, make sure to hit that like button, subscribe for more deep dives into AI investing, and drop a comment sharing which company you believe will dominate the next decade.